I'm up 4,500% in 2 years. I know most of you are probably thinking this idiot just got lucky, or this free card is going to lose it all. And you know what? You might be right. I don't take these returns for granted, and I certainly don't think I'm a hotshot who's got it all figured out. In fact, I've actually gone against pretty much all the mainstream talking points on personal finance and investing. I'm sure you've heard of them. Don't invest on margin, don't invest in crypto, don't invest in penny stocks, do not touch biotechs, don't buy options, you name it, I've done it. Because trust me, there is a 0.00% chance of getting anywhere near these returns, following the sage advice of our favorite Unc. But, most individual stock pickers underperform the market, bro. My response is, well, yeah, no duh. This game isn't supposed to be easy. Much like how most businesses go bankrupt, it's the exact same logic. Yet it's more socially acceptable for entrepreneurs. But the moment stock picking is discussed, the NPCs all default to that same line like they discovered some hidden, forbidden secret. Believe it or not, I would actually argue my path is the most practical for me and my goals. Let me explain. I'd like to think I see the game of life and pieces on the chessboard relatively clearly. I fully understand my situation when it comes to the 9 to 5 career trajectory and income potential. It's not ideal, if I'm being totally honest, for my personal goals. Now, if I were a tech bro or finance bro, it'd be a different story. But the fact of the matter is, I've never earned 6 figures in my 9 to 5, and I don't expect to. Moreover, the math just doesn't math when we consider the 9 to 5 income against the increased cost of living, especially the inflated housing prices. The traditional UNC advice just doesn't cut it anymore, and it certainly doesn't work for my situation. In fact, I'd argue it doesn't work for most of the younger generation. I fully understand how short and precious life is. I've seen and heard way too many stories of people working hard their whole lives to finally save up and retire in their 60s, only to find out they have a serious health issue and can't enjoy retirement. On the flip side, I fully understand this path is much more volatile and could result in total ruin. At the end of the day, we all have to pick our battles. There is a price to be paid for every choice we make in life, and comes with their respective trade-offs. That said, I think it'd be interesting to share my journey so far, from the wins, to losses, to mistakes, and lessons learned along the way. Hopefully it's helpful because, trust me, I've made my fair share of really dumb and expensive mistakes. The cost of tuition in this game can be brutal, especially if not learned early on with a smaller size. When I think back, I know for a fact that my past self would have found this content helpful. So if I can just help one person out there, it'll mean a lot to me, because I know for certain my past self would have appreciated it immensely. Alright, without further ado, let's discuss my journey, and boy has it been a roller coaster ride, full of ups and downs. We have to start at the very beginning. Very humble beginnings, because I was in fact humbled big time. This period marked my lowest point on my investing journey, and if I'm being honest, it's not numbers go down that's the worst part, but rather the emotional toll that came along with it. If you follow through my past videos, you'll know that I was in a highly controversial biotech at this time in the summer of 2024. During this period, I was hit with not one, but two black swan level events, which I consider the statistical equivalent to hitting two separate 2 sigma probability events back to back. The first black swan event was the company recalling their warrants early out of nowhere. The market was blindsided and did not price this in at all, which explains the subsequent 99% drop in the warrant prices. Of course, I had a significant amount of my portfolio in these. For context, prior to this event, I had followed and invested in dozens of different warrants and never once witnessed a company recall them early, while the share price was still trading at a significant discount to the exercise price. In fact, I've not seen another case like it since. A true anomaly in every sense of the word. The second black swan event was news of the DOJ alleging a key scientist with the company was defrauding the NIH, which dropped the stock over 50%. Needless to say, it's not an everyday occurrence where a key scientist is charged by the DOJ. Of course, again, I was heavily in call options at this time. Needless to say, this period hit me really hard, not just monetarily, but also health-wise. I still vividly and viscerally remember my heart dropping through the floor on the day the warrants got rugged, and the pain that came along with it, which persisted for a very long time. It's forever scarred in me, and I'll never forget it. I want to make an important distinction in that while these sorts of moves are commonplace in biotech land, the timing of these moves was anything but commonplace. What I mean is, if I had held my large position sizing through readout, then I would have accepted the potentially large drawdown. But the fact that these moves came out of nowhere, especially the warrants BS, really contributed to my devastation. It was risks that I did not see coming, or as Taleb would call it, the unknown unknowns. That was an important lesson for me that I will never forget. Throughout this period, on many days, I could feel my heart beating super fast on overdrive and the lingering discomfort that came along with it. It was also during this period where I had noticed strands of white hair appearing. For context, I was in my 20s, so it was absolutely not normal. Suffice to say, this event absolutely wrecked me hard. If there was ever a time to throw in the towel and call it quits on investing in individual tickers and justify moving into the index funds, this was the time. In fact, people around me were saying exactly this. For instance, this conversation is the background image of my X account for a reason. Notice the timestamp of July 18th, 2024, which is where the graph starts. Looking back, I'm really glad and proud I didn't quit, because if I did, there would be no 4,500% return. More important than that, though, is the time and freedom that return has brought. I've often thought about why I didn't just call it quits there, and I think my answer is a combination of genuine love of the game and confidence in myself. Maybe a little delusion sprinkled in there as well, if we're being totally honest. But ultimately, deep down, I understood the concept of thinking in bets and accepted that these were still EV positive bets in a vacuum. This was before I was introduced to Annie Duke's work, which I would highly recommend. For context, if the warrants weren't called away, they would have been a 10 to 20 bagger for me at its peak, based on back of the paper, napkin math. So I only needed to be right 1 in 20 times to break even. Those are really good odds in my favor. Moving along, the last period of 2024 and beginning of 2025, I'd argue as just as important as the prior period, but in reverse. I consider this my bounce back period. My confidence going into it was at an all-time low from that biotech stock, and truthfully, I wasn't 100% sure I'd be able to bounce back. In spite of that, I believed in myself and went in with size and conviction on many names. For instance, I was writing the crypto theme heavily during this time as an elections play, given how pro-crypto Trump had become. I was heavily in names like Bitcoin ETF, Bitcoin miners, MicroStrategy, and crypto microcaps like Neptune Digital, which I had documented in real time on X and YouTube. I also printed with Tesla call options during this period as an elections play. Speaking of which, the elections play was so pure, and looking back, it was so obvious. In fact, it wasn't even a coin flip gamble because I did hedge by buying short-dated Tesla put options in the case that the election result went differently, and added heavily into obvious pro-Trump names after the uncertainty was removed. During this time, I also went long on names like Robinhood and Reddit because they were just crushing it and executing with amazing sector tailwinds. Vlad is a superstar and was running Robinhood like a startup. The constant innovation in the backdrop of deregulation from the new administration was a clear catalyst, along with the obvious increased crypto revenue. Reddit, I'm a daily user and a big fan, and understood how underappreciated ads targeting was, especially against the backdrop of how underutilized they were in their average revenue per user metric and the room they had for improvement. In fact, I'm still a big fan of these two names today and will continue holding them long term, unless something fundamentally changes. Now, onto 2025, and boy, was it a massive bounce back year for me. I think of it high level as 3 buckets: managing the tariff tantrum, writing the recovery, and AI. March 2025 was especially brutal because of the uncertainty and chaos created by the tariffs. Ironically, at the same time, this uncertainty and chaos created tremendous opportunities for those willing to run into the burning building while everyone was getting out. An opportunity I took full advantage of. Scrolling back through my tweets in real time, I was publicly calling for buying the dip, while many were spreading bear porn about the end of international trade and global order as we knew it. For instance, I bottom tick Robin in the sixes. It would go on to hit 118 later that year. That is a 1,600% return in 6 months. Terror of trade aside, throughout the second half of 2025, I had done a ton of research and understood how mispriced the power trade was, given the sheer backlog and difficulty in securing new grid connections, which were needed for data centers coming online at an unprecedented rate. I went in heavy on names like Hut 8, Core Scientific, and Nebius, and again documented it in real time. That brings us to 2026. Like the saying goes, all good things must come to an end. The year started really rough due to my own overconfidence and hubris, which resulted in me losing most of my prior year gains. I think peak to trough, I suffered a 50% drawdown. It's really dumb because the bulk of the losses were from UiPath and Snapchat, which if Reddit and Robinhood were S tier on my awesome long-term hold tier list, then UiPath and Snapchat would be D tier. And yet I still went in heavy on them on leverage and with call options, thinking I could trade shorter term moves. No excuses, I fumbled big time. If not for this massive fumble, I reckon I'd be closer to 8,000% return. Now that is a big oof, and I totally deserved it for not following my ninja way, aka my edge. Now in terms of where I'm at now and how I'm invested, I've shifted a meaningful amount of my portfolio into index, along with exposure to individual tickers that I'm bullish on long term, like Amazon, Robinhood, Reddit, and a basket of AI names in chips, semis, neocloud, power, and physical robotics. After that gut-wrenching drawdown this year, it helped to reset the bubble I was in. It's also helped me to contextualize and appreciate the dollar amounts I was putting at risk. Looking back, I had gotten complacent and was starting to see it as numbers on a screen, like a video game. I think of it as the equivalent of driving on the road dead tired, thinking everything was okay. It was only a matter of time before a crash. And boy, did my portfolio crash. When in actuality, that number can be considered a life-changing amount for a lot of people in the world. I should have respected my money much more. They deserve better than being in short-dated call options on names that I had little edge in because I coped myself into thinking I was suddenly somehow a good value investor, which I am not. That's not my lane. There's 2 instances that really level set things for me. The first is when the YouTube algo fed me a personal finance YouTuber, and I remember she was so happy to have saved up $5,000 in 2026 to invest in the stock market. Like her level of joy that she showed in that video, I don't think I've ever expressed joy like that throughout my journey. And that's not a criticism on her, but I think rather myself. The second example is also a YouTuber who is an immigrant working at a cafeteria in Japan. He doesn't earn much, but makes the most out of his life by growing plants in his backyard, going on fishing adventures, and cooking. I think these were really helpful to me because I had gotten too immersed in the financial bubble on X and Reddit, where seemingly everyone had 7 figures, and 6-figure gains was the norm. Newsflash, it's not. Taking a step back to reflect on my progress, the actual return is only half the battle, and in some ways the easier of the 2. What I mean by this is I believe the financial foundation and having the right mindset is multifold more important. Because without a strong foundation, there would be no discipline, no savings, and thus no capital to take advantage of opportunities in the first place. I've seen it firsthand where many are just caught up in their 9-to-5 they don't enjoy, but are locked in because of rent, mortgage, and keeping up with the Joneses. By the end of it all, there's basically no money left over to compound in the markets. It's a vicious cycle that keeps you locked into your job, and I knew at an early age I wanted to escape this as soon as I could. This will be too long to fit in one video, so stay tuned for part 2, where I'll be covering my foundation and perspective. This is absolutely the prerequisite to achieving these returns. Think of it as the fertilizer which contributed to a healthy tree. that's able to withstand all sorts of weather and market conditions. There is no one without the other.